Good evening.
This meeting is being recorded.
Yeah.
Ladies and gentlemen, I welcome you all to the Q2 FY24 post-earnings conference call of Royal Orchid Hotels Limited. Today on the call from the management, we have with us Mr. Chandrabalji, Chairman and Managing Director, Mr. Philip Logan, Chief Operating Officer, and Mr. Amit Jaiswal, Chief Financial Officer. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements, which may involve risk and uncertainties. Also a reminder that this call is being recorded. I would now request the management to detail us about the performance highlights for the quarter that went by, their growth plans and vision for the coming years, post which we will open the floor for Q&A. Over to the management team.
Good evening and warm welcome to everyone. Thank you for joining us for the Royal Orchid Hotels Limited earnings conference call for the quarter and financial year 2023-2024. Please note that Q2 FY24 and the results and press release and investor presentations are available on the exchanges. I hope you have had the opportunity to browse through the highlights of the performance. In the last financial year, the industry has bounced back very strongly after the COVID. Since April 2023 onwards, we also had seen good results, which are evident from the financial results of the first quarter as well as this quarter. In fact, we have built on the success and have added 12 hotels since April 2023. The company has posted growth because of a strong business model and effective risk mitigation strategy. We are working to better margins than our company has witnessed in the recent past. Financial highlights for the second quarter ended September 23 on a consolidated basis are as follows. Consolidated revenues from operations was 70.08 crores compared to 63.17 crores last year, a growth of 11%. This was attributed to increase in ARR and also increase in F&B business. Consolidated EBITDA for Q2 24 was 18.94 crores as compared to 20.44 crores in Q2 23, a decline of 7%. Consolidated PAT before exceptional items for Q2 24 stood at 7.67 crores as compared to 9.38 crores in Q2 23, a decline of 18%. During the quarter, we've been able to increase the average room rate for Q2 24. It stood at 5,087 as compared to 4,769 for Q2 23, a growth of 7%. You must be thinking why this decline of EBITDA of 7% and PAT of 18% during the quarter. The reasons are attributable to increase in employee cost. We'll increase the salaries of all our employees in April 23 to control attrition rate, and also minimum wages had been revised by the government. The market had opened up with the competition. There are a lot of opportunities available to the employees, hence we had to increase the salary. Since we have added 12 hotels in the last financial year and 12 hotels in the last 6 months, we had to strengthen our team. The cost of such ramp up started immediately. However, the additional income and revenues of such newer hotels will take some time to come. The immediate effect on the cost will go a long way to make our company robust and powerful and more profitable in times to come. The employee cost has gone up by nearly 95 lakh. The cost of power and fuel has gone up as the government has increased the rate of electricity and gas. As we know that all hotels HLP cost is one of the major component of the cost, and the increase in the cost. The same has gone up by 87 lakhs. Since COVID, March 2020, we are not focused on maintenance of hotels due to reduction in the revenues. So the last year we are doing well. So the time has come for us to focus and spend some time on the maintenance of our hotels. So we were a little liberal in doing so. This has helped our company. This will help our company in the years to come. If we maintain our hotels well, then we'll maximize revenues. There is a net impact of 130 lakhs on the financials due to Ind AS 116. The same is explained in investors. Further, we have added 24 hotels in the last 1 year and also have another 23 hotels in the pipeline. We have done some branding exercise for the same, which has cost us nearly 50 lakhs in the quarter. The company will reap benefit of the same in times to come. The last quarter, we opened our first international hotel. For that, in the present quarter, we paid the finder's fee of 41 lakhs. Please note that all the above contribute to the increase in the cost in comparison to the last year same quarter. We are well in line with our vision to operate 100 hotels before the end of the calendar year 2023, and are looking forward to opening new hotels in different cities in India and abroad. As we talk, we are operating 95 hotels. We are witnessing RevPAR growth led by higher ARR. We believe that the industry is on a growth path and we are on the right track, and we will bounce back with better results in the current financial year. I request all not to get worried with the marginal dip in the profit. We have taken planned and calculated steps and have looked forward to our long-term goals and targets, and the marginal dip has been taken in a calculative way. The same is necessary to achieve the larger long-term goals. The management has set out a strategy to diversify the product offering, provide unique customer experience, and work towards a robust balance sheet. I would like to conclude my opening remarks by saying that we are witnessing major signs of growth for the industry as a whole, and which will show in the overall earning quality over the next several quarters. Thank you. And now we can throw the floor open for questions.
Thank you, sir. All those who wish to ask a question may use the option of raise hand. If you have an issue of raising hand, you can drop a message on the chat box and we'll invite you to ask a question. We'll take the first question from Akshay. Akshay, you can unmute and ask your question.
Thank you for opportunity, sir. Sir, what are our strategies for increasing revenue from food and beverage business? Hello.
Sir, you need to unmute.
Yes, I have unmuted myself.
Yes.
Sorry about that. See, what we are doing is right now, we are concentrating a lot on revenue from banquets, because over the years, banquets did not happen because of COVID. But once it is opened up, I found that there is a huge demand of wedding business and social functions, besides, of course, corporate functions, which were limited earlier. Now, earlier people were doing through Zoom calls, but they find that they're getting bored and tired of that. So now they all want to meet up and they all want to have conferences. So we found that there's a huge boost in that. We are also trying to introduce new menus in some of our hotels, which is the modern day menus in our hotels. Our corporate chefs are working toward that. The young modern children like to have that type of food, not the standard Indian, Chinese, continental, and now Japanese and the Italian, the Mexican, all those foods that we are introducing across the group, and so that we can continue to attract people to our restaurants. So we're working towards that, and I'm sure this will give us good benefits in the future also.
Okay, sir. So what is the expected growth rate in food and business? You can give some ballpark number?
See, expected business every year, we expect 10 to 15% increase in the business. But overall, the business will increase substantially more because of the addition of newer hotels. So exact figures I may not be able to tell you now because so many hotels which are coming up but there is a substantial increase in the percentage of the food and beverage business overall.
Okay, thank you, sir.
Thanks, Akshay. We'll take the next question from the line of Rahul. Rahul, you can unmute and ask your questions.
Thank you for taking my question, sir. Just 2-3 points. Last quarter, you had mentioned that you had taken you were going with a renovation in your flagship property, and that's the reason why some of the rooms were off the inventory and the corresponding cost also was higher. If you could give us a sense of where were those numbers in this quarter?
Well, actually, this quarter we will not be blocking any rooms for renovation. In fact, last quarter, like our Metropole Hotel in Mysore, 8 rooms out of the 30 rooms were blocked for renovation, which got ready actually towards the end of October. We were trying to do by end of September, but our projects always get delayed. So right now, we're going to be just preparing for the further renovation. We're taking up renovation of 1 floor of Royal Orchid Hotel, but which will be done in March. And so the balance rooms in Metropole also will be done in the month of March. And another good news is that since we got our Vrindavan Garden Hotel lease has been renewed, we are preparing to renovate that hotel also during the lean months next summer. Otherwise, small works will always continue to go on. But we won't be blocking much of inventory in the next 2 quarters.
So Q1, I think Jaiswalji had mentioned that there was a maybe roughly 2.5-3 crore hit because of inventory going off the market, and there was a 2 crore cost hit because of renovation, roughly a 5 crore hit. Jaiswalji, if you could help us with what the number would be in Q2.
Yeah, see, in the Q2, the dip in the increase in the expenses, I have given a separate slide in my investors presentation. Okay.
That is awesome.
So that is there. Apart from that, let me tell you, see, in Q2 also, the Goa market didn't fare very well because of heavy rains. So there was a, marginal hit of roughly around 50 to 60 lakhs from Goa market. We had, there was a hit in the revenue. Apart from that, as Mr. Baji added, few of the hotels we were doing a bit of renovation in Q1 also, and which has got completed towards the end of Q2. Like Metropole, we did some work. Even in the flagship hotel also, we had taken up few rooms for getting our, pipeline work and all those things done. But most of them have got completed now. So Q3 and Q4, we will have the full strength of revenues coming from all our hotels. And little bit of, pending things we will again do in the lean season in next year. Because, historically Q3 and Q4 has always been good for, the industry. So
Right.
now we are not taking chance. Again, a little bit, whatever pending, we will take it up in the next year.
Right, sir. The second question was on the recent announcement where you bought out in the stakes in the JV, one particular JV. If you could give us a sense of what is till now, was it kind of reported as profits from associates below the line? What will be the impact be in terms of top line and EBITDA now once it comes within the consolidated numbers?
No, Rahul, let me tell you, see, the subsidiary was Icon Hospitality. That was not reported as associate, that was always reported as subsidiary in the second quarter. Now it will become 100% subsidiary, and the good news is that hotel, which was as you all know, is that Central Bangalore was always a loss-making hotel. Now it has turned into a profit-making hotel. So this decision of ours will get into effect in third and fourth quarter, wherein we will consolidate the complete profit of that hotel.
Okay. And just to final generally question on the industry, sir, you have seen these ARR trends going up even in the Q1, Q2, which are relatively a leaner quarter compared to Q3, Q4. Do you see the ARR trends moving at 8-10% higher even in Q3 and Q4?
See, we have seen the ARR going up by 7% in the Q2.
Right.
And in Q3 and Q8, in comparison to last year, we are contemplating that around 10% growth will be there in the ARR even in Q3 and Q4.
10%. Yes, I'll come back for more questions. Thank you.
Thanks, Rahul. We'll take the next question from Chirag Singhal. Chirag, you can unmute, please.
So firstly on the guidance, I know that you shared the guidance in the last quarter, but just to again ask you on that. So are we on track to achieve the 400 crores top line guidance that you gave for this year? And also on the room addition, we were looking at some 1500 odd rooms addition for this year. So could you please confirm on those 2 points?
Yeah, as far as the guidance is concerned, that looks little stretched as of now. You know, industry does 40% in first half and 60% in the second half. So we were very robust about that 400 crore we should be able to do. But I feel now at this stage that we will fall a little bit short of that, maybe around 25 crores short of 400 crores as of now. And this includes our associate, which is the Jaipur hotel I'm talking about. But yeah, it will be little short of, what we have thought in the beginning of the year. And however, little cost has gone up, okay, because we are, as Mr. Baji earlier said, that we are investing for the long-term prospect of the company. See, we have added 24 hotels in last, since last year. So we need to increase our team, and we have hired some senior management also. Keeping in mind the further growth, almost 2022 hotel further is coming. So that cost starts from the day one. However, the return on all these work will come only in the next financial year. So that is the, thought process we are having right now.
Right. And on the room addition.
Hello?
Yeah, on the room additions, if you can comment on the room additions.
See, as far as the room addition is concerned, we have already added, in last, this year, we have added around 12 hotels, totaling to a room count of roughly 600 rooms. 600 rooms we have already added, and another 7-8 hotels definitely we are opening before March. So that will give us another 500 to 600 rooms. So we had said in the between 1200 to 1500 rooms, but 1200 we will be able to definitely touch. However, we are trying our level best to open as many hotels possible before March.
Understood. And on the ARR front, you already gave a trend as to how things are shaping up. On the occupancy front, can you, share what the trend is like? In the JLO, are we around 77-78% as we speak? And
No, We will be definitely crossing 75%. Definitely we will be, right now we are at 73% in Q2. So 75% will definitely cross, but let us see, keep our fingers crossed as and when it comes.
Right. And on the managed rooms side, will it be, say, higher than, like, let's say, ballpark 65 odd percent?
Because some of the hotels which are stabilized, they'll do more than that. But some of the hotels which are new will do less than that. Will start with 50%, go up to 60-65%. Normally it takes about 6 months for a hotel to stabilize. So that is where the little lag will be there. But otherwise, I think we are on the right track.
All right. Okay. Thank you, sir.
Thanks, Shira. We'll take the next question from Akshay.
Sir, what will be your revenue guidance for standalone entity except that Jaipur hotel for current year?
You are asking standalone or you are asking consolidated?
Consolidated, but except that Jaipur entity.
See, except the Jaipur entity, I feel that we should be ending up the year around 340 crores. We should be able to end around 335-40 crores. But it is very difficult to tell now. We have to see how the third and fourth quarter goes, because this is the best season for our industry. But let's see.
Okay. And sir, you have taken Icon as a fully subsidiary. So
Yes.
how much it will add to your revenue?
See, revenue always we have been consolidating full. Okay, in the earlier years also, because it was a subsidiary of our listed entity, so we were always consolidating the revenue full. Only thing we were taking out the minority interest, which will not be there. Now the entire profit will come to the listed entity.
Okay, sir. And sir, just one point I want to understand, that industry is going very high and the growth prospect of Indian hotel industry are looking good. So why we are not going on our own hotels? I am seeing that there is 78% occupancy in our own hotels. So we cannot further grow from there. So, and we don't have much debt on our book. So why are we not growing from making our own hotels?
No, we are working on, even buying our subsidiary was like an investment, and which will give us, one is the freedom to renovate and all that, because our partners, that was not their core business, so they didn't want to invest on renovation of the hotel. Now we'll be able to take up the renovation of the hotel and increase the revenue substantially, as we had done in the case of the Goa hotel last year. So that's mixed strategy is there. But now, of course, we are investing in revenue share hotels where there will be some deposit to be paid, so many other things will have to be done. So we are working on that. That will increase our profitability and turnover. But greenfield project, we are not planning to take up immediately.
Okay. So you are focusing on leased hotels?
Yes. Revenue share or leased hotels, yes.
Okay. So how much hotels can we expect to add in leased hotels or revenue share basis?
See, we are actually, what we're doing is that in the next 1 year from now, we'll be adding definitely 25 total hotels, out of which 3 or 4 hotels would be on revenue share, and balance 20-25 hotels will be on management contract.
Okay. Thank you so much, sir.
Thanks, Akshay. We'll take the next question from the line of Parag. Parag, you can unmute and ask your question.
Hi, thank you for this opportunity. So I just have a couple of questions. The first one, last quarter, EBITDA was lower as well as this quarter. So what is impacting the overall profitability?
See, I had given an explanation in my investor presentation. There are 4 or 5 points which has attributed to the marginal reduction in the EBITDA. Okay, if you see our investors presentation where we had, there was a increase in the employees' salaries and costs. Okay, that had gone up by almost 95 lakhs. We have increased our team as well as there were minimum wage correction for the industry as a whole by the government. Plus, the cost of power and fuel, the gas and all has gone up in comparison to last year. So that has attributed to around 87 lakhs of increase. Plus, we have invested some money in the brand presence and brand, marketing. So, which is going to add a lot of values in time to come. The yield from all these expenses will come in the next financial year. So that hit we have taken, and for our longer goals, as Mr. Baji earlier said, that for our long targets and longer goals, we need to do this because last year we could not do anything. We were not sure about how the industry will turn out to be. Now that we are sure that next 3-4 years is going to be a good for the industry, so we are moving and looking forward to that.
And what is our view on improvement in the profitability and scaling up in the revenue growth, considering that we have started several hotels last year under the management operator route?
So, see, what happens is when a hotel comes up, it takes little time, 6 months to 10 months. It takes the time for the hotel to, really get into the market and start yielding result. So whatever hotels we have started, now going forward, we are going to see the result. And whatever hotels we have started in the current year, those results will really come in the first and second quarter of next year.
And could you give us an idea about the ROE and ROCE profile of the management operator business versus the lease and own hotel business? And what percentage of the revenue, EBITDA and PAT will be coming from the management operator model?
See, as far as management business is concerned, let me tell you, our investment is nil there. Just that whatever we have invested in the infrastructure is the cost. So the ROC in management business is really very high, somewhere around 75% to 80%. But as far as yield is concerned, from the management business, we are getting a yield of around 40-45%. Which adds to the bottom line of the entire company.
The rest would be the lease business and the own hotel. And if we were to exclude the rooms under renovation, would it be possible to get an idea of the ARR and average occupancy, excluding these rooms under renovation? How will the average change in Q3 and Q4 once these are done?
I request our CEO to take up this question.
Yeah, I think your question in relation to rooms offline presumes that we're displacing income. So first and foremost, in Q2 and Q1, when we were renovating rooms that was at a lower demand period, we've now finished that renovation and have got full inventory in for Q3 and Q4. And as Mr. Balaji said, we will then take that up again in Q1 or post-March. When it starts getting hot, we'll start putting some rooms offline, which would be otherwise not utilized by occupancy. And the other point that the investors should understand is that during COVID and during 2022, the hotels really were not being renovated because there was neither the staff nor the skills to be able to do it. And it was now time to get the hotels cleaned up and ready for growth. And in fact, in the last 6 months in my time here, I've seen that all JLO hotels have been undergoing a large cleanup of R&M and preparing ourselves for growth, remembering that as demand lifts, so does the quality lift, and as quality lifts, so does the demand for price. So you need to provide that quality. So the renovation or the R&M and then the taking some rooms offline is really reinforcing or underpinning price moving forward. And it's a simple process of cleaning up the ship so that we can go on for the journey. The growth in the new assets will take time, but there, as Mr. Balaji said, there's 23 coming online. And I think this company is growing, and we've now got some very clean and very efficient hotels, and the opportunity for growth in food and beverage and rooms is solid.
So would it be safe to say that with the significant room occupancies around the festive season and the cricket matches, that the Q3 will be our quarter and we will see an inflection in our growth?
Again, actually, it's like T20, World Cup cricket it's a bit like the Bangalore traffic. It's busy in some locations and quiet in some other locations. So Dharamshala on some particular nights was running absolutely full and off the dial, and then the next day it was quiet again. So the World Cup cricket has had impact in towns across India, but it's been very specific to the matches and very specific to those cities. So if the match is happening in Nagpur, the occupancy in Nagpur is extremely high, but if it's happening in Dharamshala, the occupancy is extremely high. In terms of G20, the same impact. If your question is in relation to occupancies moving forward, yes, typically Q3 or the second half is 60% compared to 40% in the first half. We are seeing lift in rates, but it's not solid right across India. India, as you know, is not one homogeneous country. So we have our resorts right now are absolutely brimming because it's actually resort time. City hotel over Diwali goes quieter. But as soon as Diwali finishes, next Tuesday, bang, the city hotels are full again, and resorts, luckily, our resorts, Goa in particular, are seeing some really strong resurgence.
Okay, that's it from my side. Thank you.
Thanks, Parag. We'll take the next question from Akshay again.
Sir, what is your vision for company for next 3 years? Say in 26, 27, what will be your revenue and PAT target?
I don't think we make any wild guesses here, but I mentioned to you that we are on a track to increase revenues of 20, 25, 30% per annum. And, but to give a very firm commitment, we can't say, but I think we should be able to do that.
No, I can add to Mr. Balji is this. See, it is very difficult to say what will happen 2-3 years down the line. But definitely I can tell that we are on a very good track and there will be substantial growth in next 3 years. To our company, there will be some substantial growth. And similarly, our bottom line also will become very healthy in time to come. Even in this quarter also, I request you all to see one slide in the investors presentation. That is the cash flow. The cash profit slide is very important to see. See, whatever may happen, up and down, if you really look at it, our cash profit has been more than last year, same quarter. Almost same. So around 30 crores of cash profit is there in H1 and almost 20 crores in Q2. Last year in the same quarter, our cash profit was 18.88, and this quarter in this standalone it is 19.44, whereas in Concall it is 30 crores. So that is very important for all the investors and analysts to understand that this cash will give lot of support and strength to the company to grow in time to come.
And just to add to that point, I think it's important to understand the growth that's happened since 2022. There's been a significant amount of properties that have come online. And as Mr. Balji and Mr. Jaswal have mentioned, the lead time between startup and delivering on some solid results varies between 6 and 12 months. So we haven't even seen the growth in the income of the hotels that have come online. And we've announced there's 23 more properties coming online. So if you just extrapolate last year's growth and the 23 properties, it'll give you some indication of where those percentages are coming from.
Okay. Thank you so much, sir.
Thanks, Akshay. We'll take the next question from Chirag Singhal. Chirag, you can go ahead, please.
Yeah. So what is the CapEx guidance for this year and next year? And also, let's say by end of FY25, how many hotels and rooms will have under our brand?
The number of hotels within this next 1 year, 25 hotels which are already signed, they will come into operations. And they will be probably, our development team is working towards conversions of some hotels, which we are negotiating. So those I can't say right now, but those hotels come online very quickly. So it will be definitely within the next 1 year, we will definitely add about 50 hotels.
As far as the CapEx is concerned, please understand, we have taken the asset light strategy. Most of our hotels are coming under, management route, wherein we don't invest anything. It is only what Mr. Bali said, 3-4 revenue share or the lease asset which will come up. Probably there we will have to invest little money. However, let me tell you, the investment in these revenue share and lease model also are not that heavy, unlike the owned asset. But that will give a lot of boost to our, top line.
So you said 25 are already signed, which will come in the next 1 year.
Yes.
And you are seeing another 25 hotels that you might.
Yes.
Okay.
Yes, we are working. We are working on signing another 25 further hotels. 25 hotels already we have signed, which will come up in time to come. It takes little time to start the hotel.
Right.
But another 25 we are working.
Right. So that will probably come in the next 2 years. It won't be online.
By the end of next year.
By end of next financial year.
Okay, so 50 hotels is what you are saying will come by the end of next financial year.
Yes.
In terms of number of rooms, how many will it add?
Another 2,000 odd rooms, 2,000 plus rooms.
Okay, all right. And on the capex side, like how much capex are you guiding for this year and how much for the next year?
See, our major capex is going to come in one of our Goa hotel, wherein we are adding, that's an owned property, 100% owned property. There we are trying to add some 40 odd rooms there. So that will, capex will come. Of course, that will not come in this financial, it may come in next financial year, maybe around 25 crores. Apart from that, another, 15 to 20 crores capex in small capex will be there, which we'll be doing.
Okay. And there was this recent announcement that we have sold stake in Multi Hotels Limited. So what was the investment?
No, we have not sold the stake. In fact, we are
exploring.
We are trying to sell. We have announced that property we are trying to sell. We have kept the investors upgraded that property we are trying to sell. And if we are successful in selling that, somewhere around 20 crores of cash may come into the company.
Okay. And
we are estimated. We are estimating. We don't know exactly. Once the deal is done only when the buyer is ready to buy it. But we are desperately trying to sell it.
Okay. And what was the gross investments in that?
We will not make much profit because, the investment was done sometime back in 2008, although the investment was quite low, 8 crores. But if you really take the value of the, escalation in the currency, so there will not be much profit, just that some cash flow will come into the company.
Okay. So, coming back to the capex, you are saying that 25 crores is the capex that will be spent on your own property, and another 15-20 crores will be spent on other things.
Yes.
Okay. All right.
Next fiscal year.
Next fiscal year, not in this.
Right. Got it.
That's it, Chirag?
Yeah, that would be it. Thanks.
Thank you. We'll take the next question from Narendra Gandhi. Narendra, you can unmute, please. He seems to be away from the device. We'll take the next question from Rajesh Agarwal. Rajesh, you can unmute, please.
Hello.
Hello.
Yes, Rajesh.
Can you get me?
Yes,
Yes.
yes, we can get you even without the mic.
I take you to the Concall of February 2023. At that time, I had asked a question on Goa Hotel. So it was expected that at least partially by September, October, it will become operational. Could you please tell me the exact status now where we are?
In Goa, they are working, the government is working on the CRZ, Coastal Regulation Zone, and that has taken a little time, and they have not yet finalized that. So then we have got the plan ready, but we're waiting for that regulation to come. The moment the regulation comes, then we'll put in the plans and then go ahead with the approval. And then that is why we had said that the investment will come in the next financial year, because this financial year, we'll probably be just getting our approval, and we don't want to start any work in the season. So we will take up the work probably in the month of April next year for the expansion of that hotel.
Okay. I'm asking a very depth question. That is simply, what is your any strategy on value creation for the shareholders? You see, Mr. Balji, it's now almost 18 years old company on the stock exchanges. Investors' heart is they would like to see their wealth growing, their investment growing. After 18 years, 165 is not even 330 today. You see how much value destruction has taken place as far as Royal Orchid is concerned. And if we look at the other companies, peers, they have grown manifold. Nothing wrong. Past is past. We might have made some wrong estimations, some decisions which later on did not prove fruitful. But today, do we have really any strategy for wealth creation for the investors? Or we are just simply going on one quarter or the other, one quarter or the other? I can tell you, if I take you from the past Concalls, you will see it was over-promise and gross under-delivery. Like I told you, Goa, you were very sure that 100%, you have used the word 100%, we will be partially operational in September, October. Okay, things have changed. You say CSR line has changed and all those things it will take. But my thing is that, is it not the time to think of the shareholders at least?
Mr. Agarwal, I would like to, answer to your question. As you said, past is past, right? So I will not give any justification for the past. But if you really look at it, shareholders' value from last year to this year has more than doubled. And it will continue to increase as the company is in the right path of performance. Our ROCE, return on capital employed, is the highest in the industry. You can compare the ROCE of our company with any other hotel industry. So as far as the company's performance is concerned, we are on the right track and we are looking at a larger picture. As you said that, shareholders' value, we are also looking at the shareholders' value only and taking all decisions in and around that. But shareholders' value will only come when we give performance quarter on quarter, a good performance. Okay, year on year, a good performance. So we are confident of giving good performance year on year. We are not increasing the, liabilities on the company. Instead, we are trying to make the company, solid as far as the, working and the performance is concerned. We are trying to take calculative calls on all our investments. As you know, Icon, we have done a very calculative call and it will show you the result in the year end, how the things have changed. For the value of our investment in Icon will totally change in the year end. So like that, we are taking all the major steps to increase the value of the wealth of the customer. Please also understand the promoter himself have 63% stake in the company. So he will take most care that the value of the balance 37%, investors must grow. And we are on the right track, I can tell you at this moment of time.
See, basically, this thing is everything drills down to what you see. Have you forgotten about the IPO shareholders? 18 years, even your wealth is not doubled. You are talking of 1 year, and you are talking of 3 years later on. Indefinitely, things cannot be. 1 year, 6 months, 3 months. If something goes up and comes down, is not wealth creation. Wealth creation is always done when you look at the wealth vis-a-vis in the long path. You took 111 crores, 112 crores through public issue or IPO, whatever it was. It's now 18 years. Same capital is there. It's only because the industry, stars have improved a little, so share value has improved a little. Otherwise, you just think of 165 is not even 330 after 18 years. You did not do any. We in the past, shareholders suggested so many ideas. They talked of, but what is there? No idea was implemented. People came. Okay, there can be buyback, there can be splits, there can be so many things. Capital raising, preferential capital. Even you can go for some QIPs also. Like I'll give you one thing, very, very pertinent thing I will point it out to you. See what happened. In February, one of the shareholders asked you that you have taken approval for the debentures, 200 crore debentures. And you said, what type of rate you are looking after in the market? You said 9%, 9.5% or maximum 10%. Mr. Jaiswal, candidly speaking, shareholders were looking at it that one of the third party related party transactions, the loan was given at 18%. Was it fair? You reduced it to 14% and said it's a good corporate governance. No, it was not a good corporate governance. You are looking from the market at 9 to 10%, and the promoter's company at related party transaction has been given at 18%. Tell me, candidly.
No, I will answer to that, Mr. Agarwal. I will answer to your question. Let me answer before you go to next question. See, as far as that transaction is concerned, it was not in the last financial year. First, it was done when the company's chips were down, when there was a bank liability, okay, and the promoter has to borrow from market to fund the company, okay. That time when no bank was coming forward to, fund the company, that was the time when the promoter had borrowed from the market to pay to the company. Last year,
it was very high. 18% is too high a rate.
No, that is too high a rate, because if you borrow from the market, you get at that rate only. You don't get at 9% if you borrow from open market. See,
today also 14% was. Today also 14% was very high rate. Very high rate. Very high rate.
That was the cost at which the promoter had borrowed from the market and given the company.
No, I'm talking of today. Forget about past.
Correct.
Today you.
Correct,
today
sir.
You are looking at 10%.
No.
You are looking at 10%. Who will give you debentures for 10%? Tell me. If you are yourself lend at the rate of 14%, even the recent proposal was there at 14%. It was recent proposal, and you said it's a good corporate governance. No, it was not a good corporate governance.
No.
We
need to already that decision has been taken by the shareholders. We will be refunding that money to the promoter.
Yeah, because that proposal got defeated by institutional shareholders. That was very bad. It speaks very bad about the company that a FII has defeated the proposal. Very bad. I am telling you, let us think soul searching. If you don't think of the shareholders, I am telling you, whatever you do will go waste. I am a shareholder for the last 18 years. 18 years. I am holding around 1.2% equity in the company. I am probably one of the largest shareholders of the company. And I am giving you, see, if you do centralized, self-centered approach, things would have, I remember I have never talked about split specifically. Many shareholders here talked about, why can't you do split? आपको कुछ भी नहीं जाता. There is nothing to lose. You never did it. You never did it. Because we know every competitor is having a face value of 1 rupee or 2 rupees. We are having 10 rupees. You talk of the, number 1 companies, number 2 companies. Think of what they have done. 3 rights came from the Indian hotels at the rate of 75 rupees. Today the share is quoting 400 rupees. You are talking of 1 year back and we have doubled an ROCE. No, not palatable. Think of what the people did in 2006 when they gave money to you at the rate of 165. Today it is not even 300. It's not for you. You are not there. I was there. Mr. Balji was there. Let Mr. Balji do some soul searching. If he doesn't do at this age, I'm telling you, God help shareholders of the company. In spite of that, why I'm telling you? Simply because I am holding such a good chunk of shares. And in spite of that, in this open forum, I am telling that there has been something very seriously wrong. Over promises, under delivery. Over promises, under delivery. If I give you cuttings so many times, numbers, keys, hotels, see, we faltered. We keep on faltering. You keep on telling.
Okay,
but I
okay,
remember
Mr. Agarwal.
Sorry to interrupt you.
No,
Due to shortage of time, we have to take other questions. We'll take one last question, please, if you don't mind. Yeah. We take the next question from Mr. Ronak Rathi. Ronak, you can go ahead and ask your question, please.
Yeah, thank you for the opportunity. I've got broadly 2 questions. One is, what is the debt position as of now? And second question is with regards to the premiumization that is happening in the market. Like there is a trend towards the premiumization. Demand for a 4-star, 5-star rated property seems to be a lot more than a budget-friendly hotels of 3-star rated. So should we have a strategy in terms of the management contract basis also to go for to look out for better properties in terms of association? That's it from my side. Thank you.
We are doing that. See, what happens is that we did to become a certain sizable company. Now that we are approaching 100 hotels, people are beginning to recognize us as a formidable player in the market. So now when we go to a hotel where we are competing with ITCs, we're competing with Taj, we're competing with other things, at least they are beginning to talk to us. Earlier, they were not even ready to talk to us because they were thinking that we are a marginal player. Today, we are not a marginal player. We are a very large player in the industry. In fact, in terms of room number ranking, we rank about the 9th in the country amongst all the hotel chains. So people are beginning to talk to us. And we have also decided that very small hotels, we are not going to take. This is a mandate given after Phil has joined our company that we will not take very small hotels. Unless it's a very boutique property, which is marquee property, like a palace, like we have got 2 hotels in Mysore, which are, 100 years old heritage properties, with 30 rooms and 24 rooms, and does reasonably well. So we are definitely going to be, I think what you have said exactly is what we are going to be really doing, is to look at hotels which deliver us much more revenue rather than a very small revenue. So we're working towards that also.
So further to that comment of Mr. Balji's is that it is true that a focus on more upscale product that does give you brand recall and gives you brand reputation. So as much as we're diversifying across the country in more cities and more locations, and we're certainly going down lifestyle historical, religious, down the different verticals. There's no doubt that now owners and investors are actually coming in the front door who probably wouldn't before. And that's a result of brand reputation, and a result of growth. And I get the question, I can say it as a Gore or a Farang. I actually get that question asked. Logan, why did you leave the big brands to come to Royal Orchid? And my answer is, India is ready for growth. And again, they've announced 23 openings this coming year, and I am certain it's a snowball effect, and I'm very confident of that. And I can see that both by the applications. Across my desk now, I have applications from all the major brands. Before, maybe they mightn't have applied, but now general managers from international brands are sending their CV and saying, I'd like to join the group. You see, quality attracts quality. And over time, whilst I understand Mr. Agarwal's frustration, a company built like a Marriott is built over many, many decades. And Mr. Balji's investment over 53 years has been in the brand, and he stands behind it. And I'm now here to say to you, I believe very firmly those who stay with this company on the investment will reap in years to come. And you can say, maybe not today. Well, just watch this space.
Thanks, Philip. I was going to actually invite you to give your closing comments, but you've done quite a bit of that. Mr. Balji, would you like to add something to that before we end this conversation?
Yes, I like to end this conversation in the sense that, if you really look at it, from 2008 up to last year was a turmoil year for the entire hospitality business and the Indian economy also. And so, to say that we have not doubled, but there were so many cases where companies have gone down under also, and sold out and gone away. But we have stood by, and we took some really harsh decisions, like for example, Hyderabad. And we never anticipated Hyderabad will go to Telangana way during that time. And so we took a big hit during that time, but still, we took a fast decision of selling it, and the company survived. And otherwise the company would not have survived. So we've taken hard decisions, like some other companies did not take those hard decisions and they went down under. So I think we should, at least we deserve credit for that we are now steadied the ship, and it's good time for us, and let's try to work towards that. And we are, as Amit had also said, that being the highest shareholder of 63% in the company, and my interests align with all of you investors, and we'll do everything possible. And there's no question of any corporate governance things. We follow things very, very religiously. And it's only because of the exigency at that time, dire need. The company needed money, that we took personal loans and put it in here. And not because we wanted to make money out of the company. And we still don't. We're taking the money back from the company, and there are better investments available. But we'll continue to take interest of the company. So don't worry about all that.
Pleasure, sir. Thank you so much. And thank you to all the participants for joining on this call. And thank you, the management, for giving us their valuable time. This brings us to the end of this call. Thank you so much.
Thank you.
Thank you, everybody.
The recording has stopped.